be starting the program in about 10 minutes.
No problem. I'm ready.
Okay, sir.
Dr. Kalpesh ji, good evening, sir.
Good evening. Good evening.
Happy to see you, sir.
Same here, ma'am. Vanakkam.
Vanakkam, vanakkam.
Sir,
How are you?
Tamil Nadu.
Yes.
Sir, shall we wait for 5 more minutes?
Ma'am, sir said okay, ma'am.
Okay.
Sir,
Yes.
you may please start your sharing your presentation.
Well, it is already open. Shall I share it?
Yes, sir.
Okay. Am I supposed to start the session now?
Shall we start, Chamundeshwari?
Yes, ma'am.
Okay. Happy and pleasant evening to all of you. On behalf of our institution, I express my heartfelt welcome to all the participants to the second day of National Level Faculty Development Program on the topic Smart Money 360 Navigating Investments and Taxation in the Digital Age. And it gives me immense pleasure to welcome and introduce the resource person of today's session, Dr. Kalpesh Radia, Assistant Professor of Commerce in Shri V.D. Kanakya Arts and Shri M.R. Singhvi Commerce College, Gujarat. Sir is a highly socially committed person and has published 5 books in taxation and accounting now. And he has more than 15 years of teaching experience. Today, we are going to have an enlightening session on the topic Smart Tax Saving Tips for Salaried Individuals. I request our resource person, Dr. Kalpesh, to take over the session. Sir, please. Sir, you can share your presentation, sir.
Am I audible now?
Yes, sir. Yes, you are audible.
Very good evening to one and all present here. This is Dr. Kalpesh Radia, Faculty of Commerce, Shri D. Kanakya Arts and M.R. Singhvi Commerce College, Savarkundla, Gujarat. First of all, I'm thankful to Chitra ma'am for introducing me. Another thing, before we switch over to the topic for today, I wish to congratulate Dr. Subulakshmi, the principal of A.P.C.Mahalaxmi College for Women, Thuttukudi, Tamil Nadu, for organizing such a wonderful and knowledgeable faculty development program. I also congratulate the Department of Commerce, especially Samundeshwari ma'am and Muthulakshmi ma'am, for their efforts in making it a successful one. And lastly, I welcome all the genius minds of commerce who have gathered here online from across the nation. So thank you for giving me this opportunity. Let us talk about today's topic. As all of you know, I am going to share the slide and just give me a hint if you can see or not.
Yes, sir.
Yes, sir.
Visible, sir.
Okay, good. The front slide. Smart tax saving tips for salaried employees. Now, say all of us are salaried employees, and obviously this is one of the most sensitive arena. When it comes to paying taxes, we all are very much concerned. I mean, how much is my total income? How much tax am I supposed to pay? And suppose I don't want to pay the tax, or I want to lower the tax liability, what are the means? Give us some tips. We go to tax consultant and chartered accountant, we consult them, show us some ways. And I think this one would be a better platform to discuss all these measures to save taxes. Say, this is not a one-way kind of a communication, so let us interact. Can anybody tell me what do we mean by tax planning? Why do we do tax planning? Anyone? Yes, anyone can speak. Why should we plan out our tax liability? Or what do we mean by the word tax planning? Any faculty member is free to speak. Okay, let me tell you. Say, tax planning is a kind of system which offers us legitimate. Legitimate means legal ways by way of the Income Tax Act. And by adopting these ways, we can lower our tax liability and we can increase our on-hand income. You see this. These are some of the objectives of tax planning. By planning out our tax liability in a legitimate way, not only we can lower our payable tax amount, we can increase our income retention. We can increase savings, investments, and in turn, we can increase our wealth in the long run. And whenever we save, whenever we invest, that in turn leads to the growth of the industries. So actually, by paying lesser taxes and by increasing savings and investments, we can contribute to the development of India and we can act as a responsible citizen. These are the objectives of tax planning. Now, many of us know this, that we should plan out our tax liability in the beginning of the year and accordingly we should. But most of the taxpayers or earning class of people do not know how we can do this. And actually this session will focus on that particular aspect. We will try to throw some light on the ways of saving taxes. Now, see, we are the employees who are getting 7th pay, and in future, we are expected to receive 8th pay also. So obviously, it is very much evident for us to know how much taxes are we supposed to pay and how we can minimize the tax chunk. So before we go ahead, I want to differentiate the two tax regimes which are in force. All of you may be aware about this old tax regime, which is in fact for the previous year 2024-25, and even in the current year also you can continue with the old tax regime in which income up to 2.5 lakhs was exempt. Exempt means up to the income of 2.5 lakh we were not supposed to pay any taxes. Then 2.5 to 5 it is taxed at 5%. For the income between 5 to 10, it is taxed at 20%, and the maximum rate of 30% is applicable for the income above 10 lakh. This is called the old tax regime. Then in the budget of 2025, our Honorable Finance Minister, Nirmala Sitharamanji, introduced another tax regime, the new tax regime. A new section 115 BAC was inserted in the Income Tax Act, and these new tax slabs were also introduced effective from 2025 and 26. See, in this particular table, you can see that up to 4 lakh, no taxes, then each and every class interval comprises of the income of equal 4 lakh. So it is 5, 10, 15, 20, 25, and 30% respectively. Now, the thing is that at that time also we were reading in the newspaper that income up to 12 lakh is tax-free. It was calculated according to these particular tax slabs. Now, before I go ahead, I want to hear it from your side. At present, we are having the option of continuing with the old tax structure or to adopt the new tax structure, right? We have two options, either old regime or new regime. Switching over from old to new is allowed. I want to know whether switching over from new to old is allowed or not. Yes, anybody? Can anybody answer? Let me repeat the question. I have selected the new tax regime for this year. Then in future, can I switch over and go back to old tax regime? Anyone?
Sir,
Okay. Ram Mehta says maybe yes. Algu Pratma ma'am, no idea, sir. Okay, for salaried person, yes, we can. Okay, good attempt, faculties.
Sir, good evening, sir. Old
Yes.
to new, I think it's possible, but new to old, it's not possible. I think so, sir.
Okay. Okay, thank you, ma'am. Any other one? Okay, Vishal sir has replied, all tax for those who want tax deduction. Thank you, Vishal sir.
yes, we can, sir. Last year, I have filed my IT return in new tax regime, and
All right.
in this year, I have filed my IT return with the old tax regime. So we can.
Okay. Now see, here is the correct answer. We can switch over from old and new, from old to new and from new to old. But there is one condition that has been made mandatory by the government. We should not have the income from business and profession. Okay. That means what? if we are having the income from business or profession, new tax regime, as is seen on the screen, it is mandatory. We cannot switch over to the old one. But suppose we are having other incomes like salary, house property, then capital gain and income from other sources, then switching over is allowed between both. So once I choose a new tax, then I can go back to the old one. Why? Because I don't have the income from business. But if I am having the income from business, then old tax system will not work for me. New tax regime is mandatory. Clear all? Now, whether we select old tax regime or new tax regime, now this is a debate that up to rupees 12 lakh, it is exempt from tax. So we should switch over to the new tax regime. But let me tell you, under the old tax regime, that is given right over here, there were many exemptions and deductions which were allowed legally. And in the new tax regime, most of the deductions and exemptions have been withdrawn. Very few exemptions have continued with the new tax regime. Let us see which deductions and exemptions are available to us. We can take legal advantage of all these deductions and exemptions allowed under the various sections of the Income Tax Act 1961. At present, these exemptions continue with the old tax regime, not with the new tax regime. Clear? If you don't get anything, you can ask, right? Anytime you can raise query and you can ask me, sir, please repeat this. Okay. Now say among Indians, this is one of the most favorite section given in the Income Tax Act, that is section 80. And there are various subsections that you can see. Most favorite section of Indian taxpayer is this one, 80C. We will get into the details of each and every section. 80C, CCD, D, E, G, TTA, TTB, DD, DDB, and U. These are the various subsections given in section 80. Actually, section 80 is like a whole chapter. And this particular section helps all the taxpayers in saving taxes. So if you want to save taxes, you want to minimize taxes, you have to take help of all these sections, whichever sections are applicable to you. Now let me tell you, many of you might be filing their income tax return on their own. So I suppose the ultimate output or outcome of today's session will be, they will be equipped with the latest knowledge of section 80. And accordingly, they can just figure out the tax liability. Yesterday was 31st July. Generally, we file ITR by 31st of July, but for this year, the date has been extended to 15th of September, as all of you know. So by this time, you can collect all the documents and accordingly file the ITR. Apart from section 80, these are another benefits or exemptions allowed under the Income Tax Act that we will see in coming minutes. HRA, then housing loan or home loan benefits, LTA, maybe you are receiving a leave travel allowance, and the setting off of the losses facility, that is also allowed, and we will see it. Now let us discuss each and every subsection in detail. For example, see on your screen, there is a list of investments provided in section 80C. If you have made investment in any of these, then you can claim deduction. Simple meaning of section 80C. Make investment according to this list. The LIC premium, public provident fund for 15 years. Many of you might be having this PPF account. which is very different from EPF, Employee Provident Fund, right? This one is a public provident fund. You can open with any nationalized bank or private bank or post office, and the time duration for which it is open is 15 years. The minimum amount to be deposited is only 500 rupees, and maximum you can deposit 1,50,000 in your PPF account. Okay, national savings certificates for a time period of 5 years are available with the post office. ELSS, it is a kind of SIP, okay, but it has a lock-in period. Once you purchase ELSS, then it has a lock-in period of 3 years. Equity linked savings scheme is also very famous because it works like SIP. It is offered by mutual funds. Whenever we talk about a home loan, the word that comes in our mind is EMI, equated monthly installment, right? EMI comprises of two components, principal amount and interest. So out of that, principal amount is included in the list of section 80C. Whenever we pay tuition fees for our children, then we can claim tuition fees also based on the receipt provided by schools, colleges, or university. We can claim the amount of tuition fee only as a deduction. See, over here, capitation fee or kind of donation paid for admission purpose is not allowed. Only tuition fees. And that too is restricted up to 2 children only. Clear? Another avenue, quite traditional one, bank fixed deposits are also eligible for deduction, but the condition that has been laid down here that it should be minimum of 5 years tenure. So if it is for 1 year, 2 year, or 3 years, it is not eligible. It should be for a minimum of 5 years tenure. Then for those people who are 60 or above, senior citizen savings scheme is available at post office, and they can claim the deduction for this investment also. That is also for 5 years, as all of you know. And the newly introduced scheme SSY, that is Sukanya Samruddhi Yojana, for the daughters. So their parents can claim deduction for the investment made in Sukanya Samruddhi Yojana. This is the list. This is not all inclusive. Okay, the list is very much lengthy, but these are some of the frequently made investments from ATC. Now, I would like to clarify about life insurance premium. Just see on the screen, they have kept the maximum amount deductible for life insurance premium. The cutoff date is 1st of April 2012. So if your policy has been issued before 1st April 2012, then you can claim up to 20% of the policy amount as premium, up to 20%. And for those policies which have been issued post 1/4/2012, you can claim 10% premium of the policy amount or sum insured. Now, let me tell you that the sum total of all these investments may be more than 1,50,000, but Section 80 has laid down the maximum limit, that is 1.5 lakhs. And since last so many years, taxpayers have been demanding to the central government that this particular limit of 1,50,000 should be raised to 1.75 or 2 lakh, just to motivate them to make more savings. But the figure has remained unchanged till now, 1.5 lakh maximum. And the last line is very much striking, friends. This deduction is no longer available under the new tax regime. It is applicable if you file your ITR under the old tax regime. That is the main condition or mandatory one. Yes. Are you clear about Section 80C? Hello?
Yes, sir.
You can ask queries. Am I audible?
Yes,
Yes,
sir.
sir, it is clear.
Is it going in a proper way or?
Yes.
Yes,
Okay,
sir. Yes,
just
sir.
keep telling me
Smoothly going,
if
sir.
you don't get it.
Yes, sir.
Okay,
It's going really good. It's going really good. Quite informative. Thank you, sir.
okay. Now, this one, the newly inserted subsection, the national pension system. See, apart from 1,50,000 under section 80C, you are allowed to claim deduction up to maximum rupees 50,000 under section 80CD. Okay, you deposit 50,000 up to 50,000 rupees in the account of any minor as a parent or as a guardian of that minor child. You can claim deduction up to 50,000. And this provision has been made separate from section 80C. So actually what happens, Employee Provident Fund is listed under section 80C and the National Pension System investment has been listed under section 80CCD. This was inserted a few years back. One more addition to this, you just check this out. Over here I have bifurcated tax regime, old and new, and the type of employer, means the government employer, either state government or central government, and other employers. So you can include all the private employers under the second category. So the deduction that we can claim in case of government employees under old and new both is the sum total basic salary plus dearness allowance into 14%. Up to this much amount, we can claim deduction under section 80CCD subsection 2. Now, as far as the private employers are concerned, under the old tax regime, 10% benefit was allowed, 10% of basic salary and DA. Under the new tax regime, it has been raised to 14%. This is additional 50,000. 50,000 for NPS, and under section 80CCD, this is the limit up to which we can claim deduction. Again, don't mix this section with section 80C. So you should not get confused. Both are separate. So actually it is the total 1,50,000 under section 80C and 50,000 under section 80CCD1 plus this under section 80CCD2. That will be the amount of total benefit available to us till now. Apart from that, nowadays, because of awareness among people, now life is very full of uncertainty. Anytime anyone can be hospitalized. So to avoid this hospitalization expenses, we always emphasize on having health insurance or medical insurance. So over here, you can see on the screen, we can claim deduction on the Mediclaim premium for those who are under 60 years of age. Most of us are covered under this category. We can claim up to 25,000 of premium for us, for spouse, and for our children. This is the first thing. Second thing, if we have insured any person, any member of our family who is 60 plus, senior citizen, then in that case, we can claim premium up to 50,000. Apart from that, additional benefit of 5,000 is also allowed to us for preventive health checkups. This is a very lesser known point. Most of us know about 25,000 or 50,000. But this third point, you should keep in mind that for preventive kind of health checkup also, amount paid up to maximum 5,000 can be claimed on the basis of report and the receipt. We can claim deduction. Fourth point, sometimes, senior citizens are not insured as far as health insurance is concerned. So even without health insurance, I repeat, without health insurance also, their medical treatment bills up to maximum 50,000 can be claimed in the form of deduction. Suppose we are paying their medical bills and they are not having any kind of insurance, health insurance. We can claim those bills out of our taxable income. These 50,000 rupees are paid and we can claim the deduction for the same. These provisions have been made under Section 80D. I think, maybe I'm wrong, but Section 80C, CCD, 80D are very much common among salaried employees, right? But in today's session, we are going to cover some lesser known provisions also. This one is also familiar, right? For our further education or for the higher education of our children, suppose we have taken education loan, we can claim interest paid on such education loan. Now see, are you aware about the repayment period? When the repayment period starts? Do you know? Suppose today I have taken education loan for the education of my son and he is studying in a 3-year degree course. So am I supposed to pay the EMI right from the beginning, from today onwards, or the EMI will begin at a future date? Yes, anybody knows about this?
In the future only.
Okay, when? Exactly when?
After the course.
completion of the education.
After the completion of education. Anything further? The repayment starts after the completion of the course and 6 months, whichever is earlier. From that particular time point, the repayment of education loan will begin. Okay? And we can claim any amount of interest. So there is no maximum cap, that maximum 50,000 is deductible or 80,000 or 1 lakh, nothing like that. The whole amount of interest is deductible from our taxable income. Over here, the cap has been set on the maximum number of years. Ever since the loan repayment starts, we can claim it for 8 years, maximum 8 years. So suppose this is 2025, and from this year onwards, the loan repayment begins, then we can claim deduction up to 8 years, including 25. So it will be 25, 6, 7, 8, 29, 30, 31, and 32. Up to 2032, we can claim the deduction. In case we repay the whole loan before 2032, then again benefit will stop. Suppose I foreclose the loan after 4 years. Yes. Suppose I repay the loan before 2032, then just read the line. Deduction available up to 8 years, or the whole loan is repaid, whichever is earlier. So once the loan is repaid, then it is not necessary to complete 8 years. The benefit will stop. So 8 years, 8 must be kept in mind. But again, just likewise, this deduction is also available under the old regime, not under the new regime. Now comes the charity. Obviously, we make charity for noble cause, right? For some good purpose that make us satisfied and happy. And we become double happy when we learn that the donations made by us are deductible from our taxable income. Yes. Friends, there are 3 categories of donations. First category includes those donations which are 100% tax-free and 100% deductible. For example, Prime Minister's National Relief Fund. The last fund that was there, if you remember, Prime Minister Cares, PM Cares, during COVID, this particular fund was highlighted by the central government. That was also included in the 100% category. So whatever be the amount of donation, 100% amount will be deductible. I donate 25,000, then full 25,000 will be deductible from my taxable income. Let me tell you, that is called 100% category. Another category, kind of memorial funds, like Jawaharlal Nehru Memorial Fund or Rajiv Gandhi Memorial Fund is there. Very few memorial funds are there, again managed by central government, but these have been included under the category of 50%. Whatever is the amount of donation, 50% of that will be eligible for deduction. Or for example, I donate 20,000 to that particular fund, I will be allowed benefit of 10,000, only 50. And the rest are included in the third category, that is 10%. Suppose you go to temple and you donate 10,000 rupees for some religious purpose, then it will be included under 10% category. So out of 10,000, benefit for tax purpose will be 1,000 only. So these are the three categories. Detail this has been given on the website of Income Tax Department also, and it is also constantly being updated by the Income Tax Department. So donation under Section 80G, you might have read the line on the receipt that donation to this particular institution is tax exempt under Section 80G of the Income Tax Act 1961. That type of disclosure is always visible on the receipt given by that particular charitable institution. So charity, double purpose, right? Satisfaction and saving of taxes. Now, upcoming section is not for all, right? As the heading itself is suggested, right? Suppose there is any dependent person in our family, physically handicapped person in our family who is undergoing a medical treatment right now. So there are two elements. There must be a handicapped person who is dependent on us, and his medical treatment must have been going on right now. Both the elements must be present. Then we can claim the medical treatment expenses also. Now see on the screen, these figures are applicable for the previous year 2024 and 25. Say flat deduction. What is the meaning of flat deduction? Let me tell you. Irrespective of actual expense, whatever be the actual expense, forget. Just stick to this amount. Flat deduction of 75,000 for the disability between 40 to 80%. That means what? If the disability is less than 40%, then we cannot claim any deduction with respect to that. So to claim the deduction under Section 80DD, the minimum percentage must be 40%, percentage of disability. Now, who will certify the percentage? The civil surgeon, the chief superintendent of the civil hospital will certify that Mr. A is disabled by, say, for example, 50% or 60% or whatever. So for the disability between 40 to 80%, you can claim deduction of fixed amount, 75,000. Your expenses, your actual expenses may be 90,000 or 1,50,000. Forget about the actual expense. Disability lies between 40 to 80%, only 75,000 deductible. And in case of severe disability, that is the disability above 80%, you can claim again flat deduction up to 1,25,000 per year. These limits, 75,000 and 1,25,000, are per year limits. Every year you can claim if the medical treatment is going on at present. under section 80DD. Another confusing and quite closer to section 80DD is section 80DDB. Okay, the medical treatment again, but for specified disease. Suppose any of the family member is suffering from any of these diseases, okay, cancer or HIV, thalassemia, Parkinson, hemophilia, dementia, and some types of brain-related or numerological diseases. Now say, I don't know the symptoms of all these diseases because I'm not a medical student. But this list shows all these diseases. And if any of our family member is suffering from these diseases, unfortunately, and the medical treatment is going on to cure them, we can claim the medical expenses. These expenses are deductible based on age. So for under 60 years, the maximum deduction of 40,000, and for senior citizens above 60, the deduction can be claimed on ₹2 lakh per year. So you can understand that there is a thin line of difference between section 80DD and DDB. Now, speaking of disabled people, there is one more section applicable to them by default. That is section 80U. See, right over here, no medical treatment. The only fact that the person is disabled and still working, PH category, you know, physically handicapped category is there in the government job also. So they can claim additional deduction by default. But again, over here, the criteria remains the same like section 80DD. The minimum disability percentage must be 40%, not less than 40%. Between 40 to 80%, they can claim deduction deduction up to 75,000. So, for example, under the old tax regime, income up to 2,50,000 is tax free. So, in this case, it will be 2,50,000 plus 75,000. So that will be around 3,25,000. Income up to 3,25,000 will be by default tax free. And for those who are severely disabled, that is the disability of 80%, they can claim deduction up to 1,25,000. So it will be basic 250 plus 125. So it will be 3,75,000 in total. Income up to 3,75,000 will be exempt from tax in case of disabled people under section 80U. Right over here, there is no element of medical treatment. Apart from that, interest on deposits are also tax-free. Now, there are two sections dealing with the interest on bank deposits or post office deposits. For all of us under 60 years, section 80 TTA is applicable, under which interest on our deposit is tax-free up to ₹10,000 per annum. If it exceeds 10,000 rupees, then 10% TDS is automatically deducted by the bank or post office. Then, in case of 60 plus senior citizens, instead of TTA, TTB will be applicable. That means in case of senior citizens, interest up to 50,000 rupees per annum is tax-free. And above 50,000, regular 10% TDS will be deductible. So they can take advantage, they can plan out their bank investments or post office departments in such a way that interest in any year does not exceed either 10,000 rupees or 50,000 rupees, whichever may be the case. So interest on investment are well addressed in section TTA and TTB. For those of you who are teaching income tax, right? All of you are the professors of commerce, and many of you are dealing with the subject of income tax. So you are very well aware about HRA, a very important component of our salary structure is a house rent allowance, right? In case of house rent allowance also, we can claim deduction. Right over here on the screen, I have written 3 different amounts. The lowest of all these 3 can be claimed as exemption. The amount of house rent allowance that we received from our employer, that is one actual amount. Number 2, the rent paid by us minus 10% of salary. Over here, let me tell you, the meaning of salary is basic salary plus dearness allowance. On the sum total of that, we have to count 10%. And the third amount is 50% or 40%. If you are residing in any of the metro cities like Mumbai, Delhi, Kolkata or Chennai, you have to consider 50%. And for all the other cities, you have to count 40%. And you will arrive to the third amount. Out of these 3 amounts, you can claim the lowest amount as deduction in respect of house rent allowance. In the chapter of income of salary also, we faculties are teaching the same kind of formula or statement to our students also. So I think many of you are very well aware about these amounts. Now see, it's not necessary that you might be receiving HRA, okay? Particularly those employees who are working in a private sector, right? They may be earning fixed salary, different components like basic, DA, HRA, medical. That way, there will be no breakup of salary in their case, in case of private employees. So they are also eligible to claim the deduction in a different way. Now they can claim the lowest of these 3 amounts. The rent paid by you minus 10% of your adjusted total income. Now, can anybody answer me? What is the meaning of this word adjusted total income? Anyone? I want answer from any of you. Yes, faculties. Adjusted total income means what? Okay, let me tell you. Adjusted total income means our total income before any deductions. Total income means the total of 5 types of income. There are 5 headings of income under Income Tax Act, you know, salary, plus income from house property, plus income from business, plus capital gain, and plus other sources, right? These are the 5 headings. The sum total of this is gross total income, right? Before deduction, that is adjusted total income, make 10%. Over here, this is a static amount, 5,000 per month. And at third place, we make 25% of the adjusted total income. You can claim the lower amount out of these 3 amounts if you are a private employee, or if you are not receiving the house rent allowance as a part of your salary. Many of you are working in a government sector and you might be receiving this leave travel allowance. You know, we can claim travel expenses whenever we go on a picnic or tour during vacation. then the traveling expenses are covered by this particular allowance, LTA. We are eligible to claim 2 trips within 4 years. So actually it is 1 in 2 years. We must have all the proofs, the documentary proofs to claim this particular deduction. You already know about this. Okay. Say this. These are some of the criteria that I have mentioned. The exemption amount, exemption of leave travel allowance is covering the cost of tickets either by train or by air. Okay. So over here, as far as I know, bus bookings are not included anywhere. At least I have not seen that. In case of train ticket bookings, we can claim the first class AC tickets, right? And in case of air ticket bookings, we can claim the economy class fare in any national carrier. So if I claim that bus tickets are not included, am I right or not? I want to know from your side. Can we claim bus ticket under this during any picnic or our trip? Are we eligible to claim the bus ticket also? Yes or no? Okay. One of the participants has said yes and another has said no. So actually the voting goes 1:1. Okay. Another answer, yes. Yes, Ram sir, what do you say? There are many participants I can see on the screen. Ram sir, Ketan sir, Mahalaxmi ma'am, you can also answer. I know you are one of the organizer, but you are also eligible to answer. So actually, mostly it is no. They are repaying only air and train fare. Now back to home loan. Previously under section 80C, we saw that we can claim the repayment of principal amount under section 80C. Now, what about the interest paid in EMI, right? Interest on housing loan or home loan is deductible up to rupees 2 lakh under section 24, subsection 2. And let me tell you, all the previous exemptions are allowed only under the old tax regime. As far as this particular exemption is concerned, it is deductible under both the tax regimes, whether we are following old or new. Up to maximum rupees 2 lakh interest amount be claimed as per section 24B. This deduction is already there. Previously, we were claiming 50,000 from our gross income in the form of standard deduction, and now onwards we are going to claim it up to 75,000 under the new tax regime. So actually, if you know the logic, income up to 12 lakh is tax free plus 75,000 in the form of standard deduction. So we can say that income up to 12 lakh 75,000 is tax exempt under the new tax regime. So there is a benefit of only 25,000, friends. The standard deduction has been raised from 50,000 to 75,000, that's it. But if we switch over to the new tax regime, then we have to be mentally and financially ready to forego all the benefits under Section 80 that we were claiming in the past year. That will be a big loss to us as far as our instinct for savings and investments are concerned. Now, see, we incur any loss on any movable or immovable property, that is called capital loss. Okay. Now, many of us are doing transactions in share market. We are dealing in the real estate markets also. We buy properties, we'll sell off them. Sometimes we make loss. Now, that loss can be used to save taxes, to cut taxes. Okay. How can that be used? So suppose in the current year, I have incurred loss on shares. That loss is there in the books of accounts. Then I can carry forward the loss in coming years. In coming years, if I make profit, then I can set off the past loss against that profit, and that way I can minimize the tax liability in that particular year. Now, capital loss is divided into two categories: speculative loss and non-speculative loss. Okay, so the speculative kind of loss, the loss made in share market first and foremost. Okay, so that can be carried forward up to 4 financial years. And the other properties, as far as other properties are concerned, shares, debenture, and bonds are in the first category. Other than this, all other movable and immovable properties are there in the second category. And if we make loss on these properties, it is non-speculative losses. These losses can be carried forward up to 8 years, maximum 8 years. So we can use these losses to cut the profits in future and to cut the tax liability in future. So this is all about the setting of capital loss against capital gain. So this is the thing that I wanted to share with all of you. I think I was in time in finishing the presentation. Now the house is open, the stage is open. Let us interact. You can share your ideas also. You can share anything that you know in this regard. You can add and let us make it a fruitful session, a quality session. Participants, you are allowed.
And dear participants, you can post your doubts in the chat box.
Yes, you can speak also.
Yes.
Good evening, sir.
Yes, sir. Good evening.
Sir, regarding the A.P.C.C. D 1P, 1B, which you are talking about the NPS, actually, is it allowed for both the central government or state government, the additional 50,000 deduction?
Sorry, if I'm not getting. This is the question that you have typed. Any deduction allowed apart from standard deduction?
See, you are talking about the A.P.C.C. D 1P,
Yes,
1B.
A.P.C.C.D.
Yeah, A.P.C.C. D 1B, which
Okay.
is talking about the 50,000 additional for NPS. And
Okay.
it is allowable to the central government only or the state, both the governments?
Both.
When we file,
It is allowed to both.
so when we file, but it says that sometimes it's only for the central government employees, additional NPS.
No, sir. Actually, it is allowed. Both. I am a state government person, and it is allowed.
It's allowable.
Yes, sir.
Okay, thank you, sir.
There is another question raised by N. Ananthi that any deduction allowed apart from the standard deduction in new regime. See, there is only one standard deduction, and we can claim the professional tax that we are paying at the rate of 200 per month, right? We can claim deduction of 2,400 rupees from our gross income. For those of you who are working in a fixed salary mode, right? Actually, fixed salary is 52,000, say for example, then already 200 rupees are deducted out of that. So the take-home salary is only 51,800. So we can claim 200 rupees multiplied by 12, 2,400. At the time of filing ITR, we can claim. Yes.
Good evening, sir. Shall I ask one question?
Yes, ma'am.
I think it's doubt. You said the tax benefits for ELSS, PPF like.
Sorry, ma'am.
Sir, you said the tax benefits we have for ELSS, PPF
Yes.
like.
Yes.
Is it possible for the same for PLI and RD?
ELI.
PLI, Postal Life Insurance and RD. We are paying in post office.
Postal life insurance. Okay.
Yeah. So up to
Well,
20, up to maximum 25 years, 28 years, we are paying,
yes.
Yeah,
Well,
that's
already it is included under section 80C.
okay, sir.
Yes.
And then what about RD, sir? PLI for PLI, ATC, okay. For what about RD?
What about
RD.
recurring deposits?
Yes, sir.
Okay. Well, recurring deposits must be for a minimum of 5 years. Okay.
Yes, sir.
To make it
Yeah.
eligible for tax exemption, it must be for a tenure of 5 years. And it is offered by Postal Department.
Okay, sir. Thank you, sir.
Yes. Thank you.
Sir, one of the participant, Rahim, has posted a question. Is
Okay.
Form 16 essential for nil taxpayer when filing returns?
What is essential for?
Is Form 16.
Form 16, yes.
Yes.
See, for all the employees who are getting salary, Form number 16 is mandatory. However, let me tell you, sometimes the employers are denying Form number 16, and instead they are issuing a certificate of salary. In the past, when I was working with a private college many years ago, they were issuing me salary certificate instead of Form number 16, and on the basis of salary certificate, I could easily file my ITR. So actually, Form number 16 is not required, but if we want to have Form number 16 as a mandatory requirement, then we have to provide all our details of investments and all this, so that in that we can include the same. Yes. Now, I have also a question. Well, I am motivated that many of the participants are coming forward and they are making this session quite interactive one. I like interactive kind of session, let me tell you. I want to ask you that, see, you came across a lot of deductions today, starting from section 80C till standard deduction. Okay. So whether this session was fruitful and knowledgeable, did you find anything new, or it was just a so-so kind of session? Please let me know so that next time I can come up with more preparations.
It's very important.
As requested by a resource person, you can give your feedback.
Good evening, sir.
Good evening, sir.
Sir, I am Dr. Abdul Rahim,
Okay.
Associate Professor Economics from Haji Kartar Hodaya College, Uttamapalayam, sir.
Okay, sir.
Sir, really, I appreciate your presentation. It's a very excellent one, sir. Sir,
Okay.
your presentation is very excellent one, and it removes so many doubts. Thank you, sir. Thank you.
For any queries. So, sometimes it happens that whenever we are attending this type of session, we learn something new, but some questions come later in our mind.
Sir,
So
as per
I
your,
have mentioned my email ID also, and I am typing the same right over here. It is kalpeshradia@gmail.com, and you can send your queries via email also. I will try to reply to you as soon as I receive the email. And you all are the faculties of commerce, so I express my gratitude to all of you for attending this session, and I wish you all the very best.
Sir, excuse me, sir. Sir?
Yes, yes.
Sir, the faculties are mostly from other disciplines also, not only from commerce department.
Okay, okay, okay.
Okay, sir.
So any faculty from any stream can approach me freely, and I will be delighted, more than delighted, to interact with them. Thank you for listening me patiently.
Thank you, sir.
excuse me, sir. May I share my review, sir?
Yes, sir.
Yes, sir. It was quite informative. Actually, on behalf of all the participants, I would like to thank you that you provided us very good information. It was quite informative. It was indeed, detailed sections that you explained us. I'm really grateful to you. Thanks for this presentation. Wonderful voice and wonderful presentation. Tone of voice is quite properly audible, sir. I'm really thankful to you. Thank you, sir.
Yeah, thank you so much, sir, and I appreciate that.
Thank you, sir, for your valuable session. I thank all the participants for being interactive also. And I now invite Dr. Mahalaxmi to propose vote of thanks. Dr. Mahalaxmi, please.
ஞானசேகரன் சார் பொண்ணுதான் இது தெரியுதா யாருன்னு
So one more question, please. One of the participant, Ayatri, has posted a question that can we claim insurance premium with GST? Can you explain, sir, please? Dr. Kalpesh?
Yes, ma'am.
One of the participant, Ayatri, has posted a question
This
that can
one.
we claim insurance premium with GST?
Yes, yes, of course. GST, okay. GST paid on insurance premium is not allowed. The basic amount of insurance premium, excluding GST, is deductible.
Okay, sir. Thank you, sir. Thank you. Mahalaxmi, ma'am, you carry on, please.
Yes, ma'am.
Participants, please mute your audio.
Ma'am, shall I proceed now, ma'am?
Yes, please, ma'am.
First and foremost, I express my gratitude to the Almighty for the strength, energy, and blessings that enabled us to successfully organize this program. I extended my sincere thanks to the management of A.P.C.Mahalaxmi College for Women, Thuthukudi, Tamil Nadu, our esteemed President, sir, our respected Secretary, ma'am, our respected Principal, ma'am, for granting us the permission and providing unwavering support to conduct this national level 3-day online faculty development program on smart money 360 navigating the tax and investment in the digital age. It's my pleasure to thank our distinguished resource person, Dr. Kalpesh Radia, Assistant Professor of Commerce, Sri B.D. Kanakya and Sri M.R. Sanghavi, Commerce and Arts and Science, Savaraguntla, Gujarat, for delivering a wonderful and insightful presentation. Sir, you explained all the aspects of tax planning under the Income Tax Act from Section 80C to 80U. Your presentation gives a practical tips and strategies for tax savings were highly informative and appreciated by all. I also thank you, sir. I also wish to extend my warm appreciation to all the participants from across India. Your enthusiastic participation and attentive presence throughout the sessions were truly encouraging and made this event more impactful. Thank you once again to everyone who made this program a grand success.
Thank you, Dr. Mahalaxmi. And I request all the participants to join tomorrow's session sharply at 10:15 a.m. And tomorrow the session will start in the morning at 10:15 a.m. I request all the participants to join with us and have a fruitful session tomorrow. So thank you, sir, and thank you all the participants.
Dear participants, the feedback link is in the chat box. Kindly fill it. Vanakkam Kalpesh ji, sir.
How are you, ma'am?
Fine, sir. Thank you very much, sir.
Thank you for giving me this opportunity.
Thank you, sir. Thank you, Kalpesh, sir. This is the first time I'm speaking to you.
Yes, ma'am. Thank you so much for this wonderful opportunity and congratulations.
And I personally thank you for immediately accepting our invitation, sir. In spite of your busy schedule, thank you for being with us.
Sure, ma'am. That was an honor and privilege. Always to work with the faculties of Tamil Nadu.
Thank you, sir. Thank you.
I have kind of attachment with the people of Tamil Nadu. Always.
Thank you, sir.
Thank you, Kalpesh ji. Wonderful presentation.
Thank you, ma'am.
Thank you, sir. Thank you.
You are a faculty of commerce?
Yes, sir. Yes,
sir.
Where?
But mostly we have participants from other disciplines like English, zoology, chemistry. From science departments also we have participants.
Many faculties from my college and my surrounding college have also joined.
Thank you, sir.
Yes, I had informed all the names to Samundeshwari also.
Okay.
So they can also learn many new things out of this.
Yes. Now it has become a common topic. It is not restricted to commerce alone. Investments and taxation.
Yes. Well, in future, I suppose I'll come to Tamil Nadu for offline kind of.
You're most welcome, sir. You're most welcome.
You're most welcome, sir. Yes, sir.
Yes, I have asked Mahalaxmi madam to draw my attention actually, and Samundeshwari ma'am as well.
You're most welcome to our institution, sir. You're most
sure, ma'am. Ma'am, with your permission, may I take leave now?
Sure, sir. Thank you. Thank you very much.
Thank you so
Vanakkam,
much.
sir. Vanakkam. Thank you.
Yes.
Nandri.
Yes.
Mahalaxmi, Dr. Mahalaxmi?
Ma'am.
A participant has asked for feedback link. You can post it again.
Okay, ma'am.
Okay. So post it in the chat box, Mahalaxmi.
Sure, ma'am.
Thank you, Mahalaxmi. Hi, Chalama. How are you?
Dear participants, I have posted.
Chalama?
Fine, ma'am. How are you, ma'am?
Fine. How is your baby?
Yeah, fine, ma'am. How are you, ma'am? Chamundeshwari, ma'am?
Fine. Chamundeshwari, I think she left